Good morning everyone, welcome to the 3D market commentary for today. Today is November the 22nd, it's a Monday. Hopefully you guys had a great weekend and obviously have a great start to the trading week. Now let me just make sure that we put the disclaimers up on the top left hand side. Please read them, not just for legal reasons but also to understand what you can expect from these kind of videos. Now a 3D market commentary, this is what we're going over today. Essentially what we do, we send an email out every day, Monday to Friday, that has information on 5 major markets in the world. Now we call it a 3D market commentary because for each of the markets we look at, we're looking at 3 separate elements. So I'll show you that in a second. Now for those of you that maybe this is the first time you've watched us, my name is Becky. My email address is becky@tradictive.com. And then there's also support@tradictive.com, so you can use those emails to get hold of me on if you need to. Okay, so let me just show you what the email looks like. So it looks like that and obviously corresponds with market data. Now, before we go through this email, I just remembered that I'd forgotten. I need to show you this link. It's another place you can go to ask questions, and if anything, actually a preferable place for you to go and ask questions. So it's tradewithufos.com/Becky. From this link, you can get apps for different platforms. You can scroll down, get one-on-one coaching with me if you'd like. But down here is where you can post questions in this public space. Now that's great because if you post questions in the public space, we can answer them in the public space. So what it means is everybody can learn from this area together. So ideally, that's where you'd go to post questions, tradewithufos.com/Becky, and come down and post a question here. Okay, so let's have a look here at what we've got. So this is actually the 3D approach from the other day. So some of the data might not actually sync. For some reason I didn't get the one for today through. So what I'll do is I'll use this as a basis, but we'll spend more time focusing on what we actually see on the right hand side. So 3D approach, as I said. Don't know what happened with my mouse there. There we go. 3D approach because we're looking at 3 separate elements per market. First thing we look at is market climate. Essentially, where are the probabilities? Are the probabilities up and therefore we should look to buy? Are the probabilities down and therefore we look to sell? Or are the probabilities neither way, in which case we do nothing? We use an app to help us with this. It's called AutoClimate. It's a free app on most platforms you can get it on. And with AutoClimate, it tells us with the dots where the probabilities lie. So ignore the lines, focus on the dots. If it's a thick red dot, that tells us probabilities down. If it's a thick blue dot, that tells us probabilities up. And if it's a thin dot of either colour, that tells us not enough probability either way. So we use AutoClimate to help us figure out where the probabilities lie. Then we want to look for where exactly are we going to buy and sell. This is where we use another app called AutoUFOs. UFO stands for unfilled orders. Essentially what we want to know is where are the big stacks of buyers and where are the big stacks of sellers. That's helpful because lots of buyers are likely to push price upwards. Lots of sellers are likely to push price downwards. So we want to know where they are so that we can buy with the buyers and sell with the sellers. So these green UFOs here with the prices on the right hand side, these show us where the buyers are. These red UFOs with the prices on the right hand side, these show us where the sellers are. So again, we'll look at that per market. Where are the big stacks of buyers and sellers? Then what we'll look at is market volatility. How quickly can we expect these markets to go up or down? So we will look at each of these elements per market, and we'll start with the S&P 500. Now what we're looking at here is a representation of US stocks. Oh, I wonder what was happening there. I need all sources. There we go. So we're looking at a representation of US stocks and we are looking at a daily chart. Now different things happen on different time frames. Everything we go through is relevant to daily charts for this session. So with the S&P 500, top 500 US stocks, we have a confirmed upwards climate, probability upwards. Now we have buyers underneath us here at 4661.5 to 4625.25. We're also within what would be a normal move to the upside, so room for it to continue based on what usually happens as well. So overall probability up there with the S&P. In terms of volatility, we would expect that the S&P the top 500 US stocks would go up or down in 1 year by 18.23%. So in 1 day, that's up or down of 53.91 points. In a week, it's 118.68 points. And in a month, 247.05 points. So that's the S&P 500, overall probability to the upside. Now moving on to the next market, which is going to be crude oil. And in the meantime, as I load that, if you just look up here to the different courses that we do offer many different courses in stocks, futures, forex, backtesting, trading plans, psychology. Now, most of the courses come with a 3-month complimentary access to the apps. Now, AutoClimate is a free app on most platforms. You can get it on anyway. AutoUFOs, I don't know what's happening with my mouse. AutoUFOs is a paid for app. It's a subscription based model. Now you can subscribe directly to the UFOs. You don't have to do a course, you can just subscribe directly to them. However, most of the time, getting a course and getting 3 months complimentary access to the apps is actually cheaper than if you were to just get the apps for 3 months. So hopefully that makes sense. But check it out, see what makes the most sense to you. Now, having a look at crude oil, we do still have probability to the downside, thick blue dot probability downwards. And let me just squidge this a bit so we can see where the buyers and sellers are. We have sellers just above us that are pushing price down as we speak. They are between 79.3 to 76.44. Now price already came back up into them and was pushed down. That's what we expect sellers to do, is push price downwards. That's why we want to know where they are. We have buyers here between 71.48 to 69.39 with space to come down to it. So overall, probability down here with oil. We have gone slightly past what is normal in terms of a move to the downside, but still probability down. So overall, probability down. Just bear in mind we're a little bit overextended. Now with market volatility, we'd expect that oil would go up or down in 1 year by 37.68%. So in a day, that's up or down of 1.81 points. In a week is 3.99 points up or down. And in a month is 8.31 points up or down. Okay, so next market is, if I can scroll, is gold. Now, as I load this, just bear in mind down here, we do offer loads of coaching and support, and we do a lot of it for free. So on Facebook, YouTube, Twitch, LinkedIn, loads of places, you can tune into our sessions for free. We also have a closed coaching session, which basically it's a small monthly fee and you get access to more of our sessions in a closed environment. So if you're interested in that, check it out. Otherwise, like I said, we do a lot for free anyway. So with gold, we have a confirmed upwards climate still, thick blue dot, probability upwards. We have gone nearly twice as far as what is normal in terms of a move to the upside. So wouldn't be surprised to see that change soon because we are overextended. We're also kind of in the middle of nowhere, and what I mean by that is that we have sellers quite far away. They're at 1962.5 to 1938.4. and buyers even further away at 1652.8 to 1624.4. And we're kind of in the middle here at 1840-ish. So really not close enough to either of these stacks of orders to see much movement today. We do have probability upwards, but quite far overextended. So for me, there's not really much to do here with gold today. In terms of volatility with gold, we'd expect movement up or down in 1 year of 16.25%. In a day, that's 19.05 points up or down. In a week is 41.94 points up or down. And in a month, 87.3 points up or down. So that's gold. Now moving on to the next market, which is the US dollar. Now as I load the US dollar, just to make a point that we're obviously looking at statistics, we're looking at technology to help us figure out where the probabilities lie. But notice it's probability, it's statistical, it's not definite or guaranteed. There's nothing in the world that's definite or guaranteed, especially not in the markets. So we do still need to manage our risk just in case we're wrong. And we do still, or we might still, add in extra layers to this to increase our probability. Now for us, we want to look at these kind of things to make sure that we at least have confirmed probabilities in one direction or the other before we go placing trades. So coming back to our market, we're looking at the US dollar, and we have a thick blue dot, probability to the upside, confirmed upwards climate. Now we have gone slightly past what's normal in terms of a move to the upside, so we are overextended. And another thing in the way as well is that we have sellers just above us between 96.79 to 96.18. In fact, they pushed price down once already and again. So they've already pushed price down twice. That's why we want to know where they are, so we can figure out where price might turn. Now we do have buyers beneath us between 95.595 to 94.965. And again, price came down, hit these buyers and went up. So again, we want to know where the buyers are. We want to know where the sellers are, because they're pushing price up or down respectively. Now, with the US dollar at the moment, we have probability to the upside that's coming from the climate and from the UFO. We have probability to the downside that's coming from the sell UFO just there, and also we're overextended. So for me, it's kind of like a couple of points in each camp. Not enough in one direction or the other. So to me, nothing to do here on the dollar on this time frame. Now, when it comes to market volatility, we would expect movement up or down in 1 year of 6.94%. So in a day, that's 0.42 points up or down. In a week, 0.92 points. And in a month, 1.92 points up or down. So that's the US dollar. Now the final market is backed Bitcoin. Just scroll that down, there we go. So this is the last market that we're looking at here. Now we have same situation as we had last week. We have a confirmed downwards climate, thick red dot there, probability downwards. Now we have sellers up here between 66,375 to 62,792.5. And we have buyers down here at 49,702.5 to 47,450. So we're closer to the sellers, but not that close. Unlikely to hit them today. Overall probability down here with Bitcoin at the moment. Now when it comes to volatility with Bitcoin, we'd expect movement up or down. Just do that again. Up or down in 1 year of 99.97% up or down. So in a day, that's up or down of 3,621.07 points. In a week is 7,971.42. And in a month, 16,593.84. So that's the volatility expectation on Bitcoin. Now, that's the last of our markets. So just to summarize, for each of the markets that we've looked at market climate, using AutoClimate, this app down here, to help us figure out where the probabilities lie. Up, down, or nowhere. And therefore, do we buy, sell, or do nothing? We then tried to figure out where we should be buying or selling based on where the closest stack of big buyers are and the closest big stack of sellers are, so we can figure out where we should be buying and selling, where price will be pushed up or down from, more likely. And we've also looked at volatility, how quickly we expect the markets to move. Now, if you have any questions, you can email me, becky@tradictive.com, or you can go to tradewithufos.com/Becky and post a question here. If you do that, then I can answer the question here and everybody learns from the same area. Also from this link, you can book one-on-one coaching if you'd like, and you can get the apps that you need directly from here. Now, just to round off, let me just bring this back up again. Just to round off, let's scroll down and have a look at our weekly economic calendar. Now, we get this weekly economic calendar from fxstreet.com, and we filter by high impact news. Basically, what we want to know is what scheduled news reports are coming out that are likely to have an impact on the markets. So actually for this week coming up, we don't actually have that at the moment because this is last week's. Let's just go to, and we'll have a look at it now. Let's just go straight to the site. So it's fxstreet.com/economic-calendar. And what I'm going to do is I'm going to look at from today for the next week. And we're going to filter by major markets. You could select all. In fact, let's select all and see. And then what we're going to look at is high impact news. So this is where we get it from. And on the email that you have, if you guys have it, then this is what you'll see. So today we have news coming out later on about 4:45 Eastern time on the New Zealand dollar, or also, of course, New Zealand markets. So if you trade in that country or you trade the New Zealand dollar, be aware of that later on today. Otherwise, nothing until tomorrow. So my colleague Boyan will be taking the session tomorrow and Wednesday, and then of course Thursday and Friday are Thanksgiving. So I will be back next Monday. That'll be the next session that I do. So I'll see you guys then. Hopefully you have a great trading week ahead. Hopefully you have an amazing Thanksgiving for those of you that are in the States celebrating. And